My name is Patrick France, Senior Instructor here at VectorVest. Let's go jump into the homepage, just take a look at what's going on here today. So looking at our homepage, starting off at the very top, we have the market timing gauge. This is a gauge that will stream throughout the day, tell you, what's currently the conditions of the market. Right now we see it's one tick into the green, it's mildly bullish. We still advocate caution when buying stocks at this time. If you're more aggressive, you could use this as an opportunity to jump on board, maybe get into a stock or two. But if you're, more of that conservative investor, want to be a little bit more cautious in your portfolio, you may buy something, may dip your toes into the water, but definitely not loading up the portfolio on a day like today. Even though we do see the Dow's currently up 93 points almost, NASDAQ's up 45 almost, S&P's up 10. VectorVest Composite up about 0.5% as well, so that's looking pretty good here today. Moving into our color guard, we see that green light in the price column. Now, we have a philosophy here at VectorVest that, the first green lights that we get after a confirmed down signal are the earliest signs that the market's reversing and starting to head higher. So we saw one back on June 6th, getting another one here today. They're early signs. So like I was saying, if you're aggressive, you may, load or get a position or two in your portfolio if needed on these green lights. But if you're more conservative, you may be waiting for that calls column to switch from a confirmed down to a confirmed up. That's going to be our last signal VectorVest gives to get into the market or get out of the market. We have other signals that come before that will get you in and out a little bit earlier. But that's our final signal if you're not familiar with or if you're not familiar with our market timing in general. Looking over at the advanced declines right now, we got 60% of stocks moving higher, 29% of stocks moving lower. So, when we look at the advanced declines, you want to make sure we have a 2-to-1 bias typically. Right now, we do have over a 2-to-1 bias stocks of advancing that compared to the stocks that are declining. So that's definitely a strong indication that today has some strength behind it, and getting the momentum that we like to see here. So looking at the MTI, though, we see it's off nicely off of the lows from the beginning of June and getting close to that level of 1. So if you're not familiar with the MTI, it's cast on a scale of 0 to 2, 1 being neutral. Anything above 1 shows, there's good or means the underlying market is up. Below 1 means the underlying market is down. So, we're coming off of those bottoms, starting to see that pick back up. Going to keep a close eye on that in the next few days to see if we break above that level of 1 here, this week or maybe possibly the beginning of next week, depending on how the market reacts or how the market handles itself over the next coming days. Let's go ahead, get into today's topic here. What we're going to be doing is, if any of you guys watched our strategy of the week I did a couple of weeks ago, it was lining your pockets with comfort and safety. If you haven't watched it, I definitely recommend to go back, give it a watch. It's short, sweet, simple, right to the point, and that's what we want to have for you guys. But it really is holding true with these current conditions. So going into the viewers tab here, as you can see on the left, I'm in the sector viewer, and this is looking at the top performing sectors sorted by relative timing. So the highest momentum at the top, lowest momentum at the bottom. And looking at the sectors, you can see we have utilities, insurance, aerospace and defense, buildings, REITs, sectors that are typically considered more conservative in nature, if you will. And that's going to be why we're talking about our topic today, which is going to be the flight to safety. Investors out there are really turning risk off in their portfolios. They're getting away from the biotechs. They're getting away from the speculative plays with, all of the geopolitical concerns, trade war concerns or talks that you hear on TV, with all the, growth slowdowns that you hear about going on all across the globe. The debt levels of some countries in the European markets that could, overflow into other markets. There's a lot of worries and a lot of concerns right now on risk, and people or investors just don't seem to really be wanting to take that risk at the current time and it's showing right here in the sector viewer. So that's why right now, more so than ever, looking at stocks with a high relative safety, good fundamentals, good sound, solid fundamentals, can really be one of the best protections in your portfolio from these sell-offs or these pullbacks that we've seen currently. Defense sectors for money to hide. Defense, aerospace and defense, you have a lot of money going into those companies, and they're all on contracts, all government contracts, those guaranteed money. It's hard to get away from those. Those stocks really make a lot of money and continue to go up over time, because that's what it's about here in the market. If you're not getting into stocks that are making money, the likelihood they're going to continue to go up in price is slim to none. People buy companies that make money. Simple as that. Steve saying Boeing not so much. So Steve, Dr. DeLito actually talked about Boeing a few weeks ago in an essay of his. Boeing, has had some rough patches in the past. They've had some issues come up, some bad publicity, but, they get them fixed. They put their heads down for a little bit, try to stay out of the news for a little bit, get those contracts back, and start getting on the right track and going higher over time. So with that, Boeing's, I see somebody talking about their civil side. Their civil side, is definitely hurting, but their defense contracts, their government contracts still are rocking and rolling there with those. So, be careful on that one. Yeah, it's pulling back, it's probably selling off a little bit, but eventually it will come back. Just wait for that turnaround, wait for some confirmation of that. Could be a great buying opportunity on Boeing. Let's see. Iha says, smart money has left the markets as witnessed by rising price but lower volume. Yeah, and that's the thing. Smart money, there has been a lot of money that's been moving to the sidelines or moving into, out of stocks into bonds, more of that safety factor. Once again, that's what our topic is today. But there also has been a big push, if you're into stocks, into the stocks that they're more of the safety style or safety, the high safety stocks, if you will. And that's what VectorVest can do quickly and easily for you, is help identify which stocks are doing the best, which stocks are doing the worst, and also which sectors are doing the best. So when you see these types of things that we're looking at here, that's a clear indication that people are turning risk off, moving to the more conservative plays. And so that's what we're going to be looking for here today, and showing you how you can easily find them with a few simple clicks of your mouse. So with that, let's go ahead. What we're going to do is we're going to jump into the Unisearch tool here today. If you're not familiar with VectorVest, Unisearch is our scanning capabilities, if you will. We have over 300 different searches pre-built here. You can also build your own custom scans. And it really allows you, a lot of flexibility to find whatever stocks you're looking for here, and also instantly identify the best of the ones that you're looking for. Because I see the Glenisms coming in here as well. So what we're going to do is we're going to start off with the safest stocks with buy ratings. If anybody was in our Facebook live stream today, in our mobile app, we have this same list built into it, so you can find it in the premium watch list section there as well. But this is a very simple list. It's just simply looking for the stocks that have a buy rating, which is the first parameter and only parameter here. And the main power is going to be coming in with the sort. It's going to be sorted by the relative safety in descending order, so the highest RS stocks at the top. And you may not, if you're not familiar with the relative safety is our indicator that looks at the consistency and the predictability of a company's financial performance. To keep it simple, though, it's simply an indicator of risk. So if it's above 1, the closer to 2 it is, the safer the stock is. Below 1, the closer to 0 it is, the riskier the stock is. And with that, with going back to our main topic here today of people moving into the less risky stocks, using an indicator like RS can be extremely powerful in these current conditions. So if we look at some of the stocks we're getting here, we see Ross Stores, very popular name, very big name. We get ones like Euronet. Most people may not be familiar with that one. I personally just started finding out about this one a few weeks ago. But then you get other names that you're probably familiar with, like Dollar General, Starbucks, Lululemon, or Visa, Disney, insurance companies. We saw insurance as being one of the best performers here as of late. We get Progressive. I saw, what was it? I think it was Geico in here earlier. Some other ones showing up as well in that list. But getting a lot of different names, but getting a lot of stocks in the main industries that we were seeing main sectors that we were seeing just a few moments ago. So with that being said, these are the kind of stocks that people are really starting to move into by turning off that risk and getting into the stocks that are more consistent, that have the fundamentals to back up those prices. If you notice, they all have that buy rating. Still, at the same time, we still don't advocate buying these stocks unless the timing of the market is telling us to buy these stocks, which is why we started off on that home page originally, is to make sure it is a good time to buy. As an aggressive investor, we saw that first green light. If you really needed to buy a stock here today, these would be a great place to start. Not saying, these specifically, but we'll be taking a look at one step further into this process as well. Also, if you're interested in the stocks with a high relative safety, or if you want to learn more about the stocks with a high relative safety, a colleague of mine, Jim Penna, did a strategy back around, I think it was February 20th, somewhere right around there, where is the inside story on relative safety, and he goes into great detail on it, and gives a great demonstration on why this indicator is so powerful. It's something unique with VectorVest that you're not going to be able to find anywhere else. All right, so getting into it though, first off, we're starting off with the first stock, Ross Stores. Man, there's a lot of stuff Glenn has on here. Let's go ahead. We see support resistance, obviously great technical indicator to keep an eye on. We see Ross Stores is coming up to a level of resistance potentially at 168. But overall, we've seen a nice steady rise ever since the bottoms back in December, where we've seen higher highs. Actually, let me get that off of there. Yeah, we've had higher highs here, also higher lows. By definition, putting this stock in an uptrend. If you look though as well, we see a nice steady rise in price from bottom left to upper right. Now, granted, we did see some sell-offs here when the overall market was having some issues towards the fall to winter time of last year. But because we know that these stocks have high safety, they have great fundamentals, we have a good idea and a good understanding that they're going to bounce back as the market starts to recover. Looking at the earnings per share, we see a nice steady rise from bottom left to upper right with the EPS as well. And that shows that they're growing their earnings quarter over quarter, year over year. One unique thing with VectorVest that you're not going to be able to find anywhere else, so we get questions about quite often here, is when looking at our earnings per share, it's not only just a historical earnings per share like you can find in most places or find anywhere else, but it's also taking into account a forecasted 12 months down the road earnings per share as well, based off major analysts. And so when we see, for Ross Stores, for example, it sits at 4.31, that's saying they're expected to be at that point 12 months down the road. So when you look at our earnings per share and you see it steadily rising, that shows that not only is the company making money, but analysts continue to expect them to make money 12 months down the road. Jay, that makes me his Padawan then. But when you see that though, that not only tells us that the company's making money, but that big money is expecting them to continue to make money 12 months down the road. And if, big money is expected to continue to go into this stock for the next year at least, you can expect to see the price increase over time as well. So it gives you an upper leg on the competition or other investors that may not get this kind of information, because you can only, this kind of earnings per share number is something you can only find here at VectorVest. Yeah, apparently if Glenn is the Jedi Master of Twitch, that would make me his young Padawan, because I'm definitely a lot younger than Glenn is. So yeah, that's something unique that you're not going to be able to find anywhere else. And with that, because we saw the consistency in earnings, we had a pretty good understanding that it was going to come back when the market started coming back, and it definitely has. Looking at the next one, EEFT, earnings per share steadily rising. This one had a little bit of a rough patch right at the very beginning of the year, but not nearly as much as what we were seeing with things like Ross Stores, for example, and then has really rallied ever since that point. And this is going to be, from what we're looking for, an even better look here. Just let me take off the moving averages for right now, because those are shorter term, more for a trader. And what we're really talking about here today is more of that longer term style of investing. So when we look here, we see just a nice steady rise. Pullbacks are more just sideways moves, and if it does pull back, it quickly comes back. This is a great looking stock if you're looking for that flight to safety. Getting into our next one, Dollar General. Once again, nice steady rise from bottom left to upper right. Really started taking off as of late, off to a new high just today. But earnings, earnings is the engine that drives stock prices higher, as Dr. DeLito would say, our founder here at VectorVest would say. And we can see exactly what he means here when we look at Dollar General. HEI, another great performer, pulled back a little bit, had a rough patch during last fall, but definitely came back nicely. Good fundamentals, sound fundamentals, and we're seeing how well that's performed ever since. Also, this is something that I've learned from a chart standpoint. More of my trading typically leans towards charting, graphing. And I let VectorVest do all my fundamental analysis, and then that way I don't have to worry about doing that part of my analysis. VectorVest covers it. Then I usually get into the charts and find ones that look best for me based off the charts, because I already know they have good fundamentals. So that's how VectorVest helps me specifically, reduce my own time for my investing and my, portfolio there. But this is something that, I learned a few years ago reading a blog, and they called it a green line breakout. Guy by the name of, I think, David Starr, I believe it was, or not Starr, what was it? Trying to remember his name. Dr. Wish, that was the guy's name. He has a blog out there. Forget the blog's name, but Dr. Wish, I think, or David Wish, or Dr. Wish, something like that, is where I learned this technique from. But it's called the green line breakout, is what he names it. And basically, what we're looking at is whenever a stock has been, steadily rising, sometimes you'll see a pullback, but then gaps up to a new one-year high. Then what you do is you put a line right at the low point of that gap up, and that is what he would call the green line. So we'll make it green just to go off of the example here. Let's go make it a darker green.
Make it wide too.
Yeah, I'm gonna thicken that up so everybody can see it out there as well. There we go. So that's your green line. And now, as long as it stays above that point, it continues to run, you stay into the stock. If it breaks below that, that pattern is voided out or it's broken. And that would be when you start to, close the position, minimize any loss, and get out of it. But more times than not, you're going to see it continue to do something like this. A while back, I caught Tesla doing this, Microsoft doing this, a lot of big names. So it's not just, the more aggressive stocks. You can find some really good, solid names that exhibit this pattern. And when you do, those are going to be, the ones that make you really, really nice profits in your portfolio. Let's see. Badger saying this is a great search that is easily modified to show buy recommendations above or below a certain price. So for Twitchers looking for stocks with buy ratings under $20 a share. Yeah, that's the nice thing about that search. We'll get into that here in a little bit, but Badger, that's a great idea as well. I'll definitely show that as well for you. There we go. Tweezer Bottoms, welcome. Wishingwealthblog.com. Thank you for that. But yeah, I used to follow Dr. Wish a long time ago, a few years, I guess not that long ago, but maybe about 3 years ago or so. And it's a really great blog that he does. So thank you for that. Thanks for posting that in the chat there. If you guys are interested, I'd definitely check it out. Let's see. Do you use the 3 and the 8 EMA for entry and exit? So Deacon, with 3 and the 8, I use it for more shorter term trading, not necessarily for longer term like we're talking about here. But for shorter term trading, yeah, 3 and the 8 work wonders. The pattern, do that 8 months ago, the gap up. So yeah, back here. So if we go back, let's see. So that's the thing. Let's take this one. Okay, you had a green line breakout. You put your line there. Just let me change that up a little bit. This is our green line breakout. And all of a sudden it broke down here. Okay, you got out. But then you're patient with it. You're patient with it. You see a new opportunity here. This was right here. This would have been a green line breakout. You didn't make any money on that one. That's fine. You got here. That got you in even earlier. That got you in. Let's turn off our horizontal line and see where the price was that day. Let me just toss my cursor back on. So closing price 98.23. Now it's trading at 126. Still not a bad trade there. And I didn't say it works every single time. And, nothing is 100% accurate. If it was, everybody would be using that and nobody would be using anything else out there in the market. But at the same time, more times than not, you will see a continuation with that. And if you don't, that's fine. That's why you use that line in the sand, if you will, to get you out quickly. So you're taking a small loss rather than, taking a big loss. And those winners that you have will definitely offset those small losses that you take from time to time. Deacon's asking, do I use this strategy on gap downs to short? I've seen it happen in the past. I don't really short stocks. If I do, I'm going to be trading options. But yeah, I've definitely used this strategy in our jockey club. You've probably seen me demonstrate it there. I've used this strategy for buying puts on stocks, definitely made some money with those. So it can work both up and down. The markets tend to move up more than they do down. So that's why, and also we're talking about buying here today. So that's why we're looking at the bullish side. But yeah, you could definitely use this kind of a strategy for the downside as well. Yeah, they move down faster, but that's a shorter time frame. Retirement coach in Pinna likes HEI and has it on one of the group's retirement portfolios. Interesting. That's good to note there, Badger. So HEI is in one of our retirement portfolios that they do in the retirement coaching from my colleague Jim Pinna there. So if you're interested in stocks like this, I would definitely recommend taking a look at our retirement courses as well. I think we have one going on or getting ready to start here soon, if I'm not mistaken. So if you're interested in these kind of stocks, or preparing for your retirement, if you're younger like me, preparing for retirement sooner rather than later is definitely crucial. No need to keep kicking that can down the road. Even if it's a small amount, getting started earlier rather than later can definitely help be more prepared for that retirement age or when retirement comes, because you just don't realize how fast time flies until it's already too late. So no time like the present when it comes to, preparing for retirement there. So yeah, that's HEI. Let's go on to the next one. Just another HEI, just different share types. Starbucks, nice steady rise from bottom left to upper right. Earnings steadily rising, a little bit choppy, but overall, nice steady rise there. COO, another one. Earnings, a little bit of an issue, so you may skip over this one. If you're not comfortable with it, if you're spending more than 5-10 seconds looking at the chart of a stock or looking at the graph of a stock, simply move on. As we saw earlier, we got 8,400 stocks that we track. No need to try to force ourselves to buy one when there's others that may sell themselves to you. User groups. Thanks, Lisa. See you tomorrow. Looking forward to tomorrow's session, and thanks for stopping by with us. All right, so looking at Lulu, another great one. A little bit choppy. Definitely took a little bit of a beating through that downturn last year, but came back nicely. No surprise, good fundamentals. And same with MKTX, same situation. So we see, as we scroll through these, very similar situations, but some of these have had some issues from time to time, especially during, market pullbacks. One thing that, the next step that we want to take a look at is getting back into our Unisearch tool. And we're going to be taking a look at how you can find stocks that not only have that great safety factor to them, but also have that ability to withstand those severe, lengthy price declines or pullbacks in the market. Before we do that, though, I just want to point out what Badger was saying earlier. This is a very basic search here in VectorVest, safest stocks with buy ratings. The nice thing I was talking about earlier with the Unisearch tool is you can customize it to fit you. Everybody has the ability to do this. With any version of VectorVest, you can do the same thing. So if you're just getting started in the market, or if you're younger like myself and want to find some of those core holdings to start putting in your portfolio, the nice thing about this is you can filter this by price as well. So if you see, raw stores is $100, EFT is $160, Dollar General is $135, and you don't want to pay, you don't want to get into stocks that are that expensive. Let's say you want to buy more shares of it, but want to get, so you want to get stocks that are, let's say $10 to $20. You keep this and you just build an extra line here. We're going to build two of them to put that parameter around 10 to 20, but basically what we do is go to stocks, then price volume, price split adjusted. We do greater than or equal to, and then custom value, and then just simply type in 10. And then we'll just basically do the same thing. So price split adjusted, but this time we're going to do less than or equal to, and then we're going to type in 20. And then we just run the search again. And now we've got stocks within our price range that still have strong relative safeties, that still have that buy rating, that fit more of the price range we're looking for. You can save this, and that way you can customize it to fit your needs, and you can have it ready to go for you anytime that you want. This is one of the beauties of the Unisearch is that you can customize our pre-built ones or build your own from scratch if you wanted to. And a lot of these have the ability or are simple enough that it just takes a line or two to really make it unique for you, like we've shown here today. But yeah, this is a great way to do it here. Litz, line in the sand, famous Glenism. So yeah, not going to probably be using Litz. Has a little bit different of a meaning for my generation, but yeah, line in the sand, abbreviation. I've seen LITS as abbreviation for line in the sand, but I like just using the full words here. All right, so moving on, we've seen how well relative safety performs, especially when the markets start coming back. We've seen, how strong of an indicator that can really be. But if you want to sleep better at night, if you will, and find stocks that are more resilient to these pullbacks that we've seen recently. A nice thing or a nice search to take a look at is just one right above it called Safe and Sound. Now what we're doing is we're looking for high or stocks that have a VST greater than or equal to 1.25, making sure their relative safety and relative values are both greater than 1, making sure their price is greater than $1, have 100,000 shares or greater, have decent equity there, making sure it's not ETFs that come back in this, and then stock exchange has to be in the American exchange, the optionable American exchange, the NASDAQ or New York Stock Exchange optionable stocks as well. So your bigger name stocks typically. But the main power is going to be the sort on this one, and it's RS times CI. So as we've talked about, relative safety is that risk factor, if you will. Higher the relative safety, the less risk. CI is the stock's ability to withstand severe lengthy price declines, and this allows you to find stocks that are resilient to pullbacks. So as you notice, we're probably going to see some of the same stocks that we were seeing earlier, but some of the stocks that we were seeing that had severe pullbacks throughout the fall months last year are now gone. So let's go take a look at the graph of these real quick. So we'll graph them all and pulling them up. So notice, from throughout the fall of last year, this stock just moved sideways and then continued to rally. Earnings per share still looking great. This is that comfort factor, that ability to not worry or stress about the stocks that you're in when, you have all that fear going on in the marketplace and all the negative news that comes out every day. If you're worried about your portfolio when you see that negative news, using a search like this, Safe and Sound, the RS times CI sort, can really help alleviate a lot of that stress. Because when you're stressing about that kind of stuff, what you're doing is essentially allowing your emotions to take advantage of you. And emotions are the #1 portfolio killer out there. I don't care what anybody else says. Emotions are what kills a portfolio. If your emotions dictate your investing, you are going to have a hard time making money in the market. Removing that emotion out of your investing is one of the best things you could possibly do if you want to be successful in the market. And being comfortable with the stocks that you're in is one of the simplest ways to help remove that emotional aspect of your investing. So here, we got a stock, ERIE. Nice steady rise from bottom left to upper right. We don't have those big sell-offs that we saw. We have a nice steady rise in earnings. So same thing as what we were seeing with the safest stocks with buy ratings, but price is a little bit more consistent here. EEFT, once again, we looked at this stock earlier. Throughout most of the fall, it moved sideways rather than pulling back or selling off like we saw earlier. Now, saw it pulling back a little bit, just a tiny bit, but then quickly rebounded, shot up, and has really rallied ever since as the market's been moving higher. And if you look since the beginning of May, Joey, can you pull up a market timing graph for me real quick? So if we move to the market timing graph real quick, we see really since the beginning of May, market's down. We've been talking about that for quite some time. We saw the bearish divergences we've been talking about in our special presentations, our daily color guard reports, all that. So if you're familiar with VectorVest, or if you're a VectorVest subscriber, you're probably familiar that, we were warning you well before this point that the markets are due for a correction here. Well, they finally came in May. We saw that sell-off. Markets really pulled back sharply. They've been rebounding nicely ever since, but we didn't realize, or we didn't know when that was going to come, but we knew it was bound to happen in the near future. So really since the beginning of May, markets are lower. But as we go back into those stocks that we were just taking a look at, let me pull them up. Is that going to change?
Yeah, I'll take it back.
Looking back at these, since the beginning of May, EEFT steadily moving higher, resilient to that pullback in the market. If we go take a look, EHTH, since the beginning of May, continuing to move higher. Once again, showing how powerful that CI indicator can be. So, if RS is our fundamental indicator, CI is going to be more of your technical indicator. So when you combine the power of fundamental and technical analysis together, it can really make a great recipe for success in a portfolio. As we look at EHTH, we can see just nice steady rises in price, not really selling off at all as the market's been selling off, resilient to that pullback, continuing to move higher, just coming off of its new high, 1 year high here. So definitely, being able to sleep at night can definitely help keep a clear head in investing, but also make you a happier investor as well. Let's go take a look. Autozone. Once again, looking through the fall, it moved sideways. It didn't sell off like we saw with Ross Stores or some of those other stocks. It was resilient to that sell-off. Then continued to move higher ever since. Had a slight pullback, but quickly rallied back, just hitting a new high here today. Mercury Computers, same situation. Nice steady rise. Had a little bit of a pullback, more of a sideways to lower drift, if you will, more so than a real sell-off throughout the fall. But held its own really, really well, and then continued to rally up until about the beginning of May. Pulled back a little bit, but once again, not nearly as much as what we've seen with a lot of other stocks we've looked at here. AUDC, same situation. NSSC, NAPCO Security Systems, it looks like. Some of these, Westhoff, hey, no problem. Glad you tuned in here today. Yes, they are from a Unisearch. We'll go back and talk about that Unisearch in just 1 second. So better late than never, though, right? But looking at this one, once again, nice steady rise. When the market was pulling back, stock held its ground, moved sideways. Market started moving up. Stock continued to move higher here. So these are the kind of stocks that, when times are tough, when the headlines are scary, these are the kind of stocks that, allow you to not have to, constantly be attached to your computer, attached to your phone, monitoring what your stocks are doing every second of every day, worried about, are they going to drop, tomorrow? Are they going to drop overnight? These are the kind of stocks that you can just, sit on, hold, and if you see major changes occurring in price, obviously you can make some corrections or take some defensive actions, but you're not going to have to do that too often with these kind of stocks. And that's really the thing that we wanted to cover here today with you guys, is just looking at, some great performers, how to find some of the stocks that'll really help alleviate a lot of your stress. As Glenn's been talking about a lot, you have the pyramid of investing. Can you pull up the pyramid for me?
Yeah, I think we have it. We have to go here, though, and here.
All right, so looking at the pyramid right here. We talked a little bit, actually, let's go from this way. There we go. We've talked a little bit about the when to buy. What we're focusing on really today is what to buy. And in times of fear, when people are, moving more towards that flight to safety, if you will, what to buy is extremely important, because from, 2017, we had just a market just doing nothing but going up. Those are the markets that makes everybody feel like a genius. And you could buy anything. You could throw darts at a dartboard and probably make money on those kind of stocks. They could be the most speculative stocks out there. They could be losing money, hemorrhaging money, and still making money with them. And you feel like a genius that you're doing the right thing, that you're seeing these great returns. 2018 brought a lot of people to reality, seeing the sell-offs that we had. And we're seeing a shift in mentality from investors. And we want to keep you on top of that. We don't want you to get caught off guard. We want you to stay on top of that. And we want you to be aware of that shift. So that's what we're talking about here today. and being able to find those stocks that are pertinent to the current market conditions, because market conditions are always going to change throughout time. You know, they're an ongoing change, they're an ongoing cycle as you know, different factors play different roles. So that's what our point of today's session is, or today's stream is to show you guys how easy it is to find the stocks that are most pertinent in these markets, and how to also reduce your stress, and once again, reduce the time it takes to answer that question of what to buy. The second part. Steve is asking, with respect to this filter, would filtering for dividend payers be more safe and sound? Not necessarily, Steve. If we go back to the Unisearch, and also why we're in the Unisearch, let me just get that pulled up. Where's my mouse?
Over here.
Lost it for a second. Why we're in the Unisearch, Wes, to answer your question, we're looking at safest stocks with buy ratings, but then moving it one step forward and taking a look at safe and sound today. But Steve, getting back to your question about filtering for dividend payers, if you go over here to the right, all right, so it's back to the regular order. You know, some of these are going to have a dividend. The first one we looked at has an annual dividend of $3.60. Some of them aren't, but I can, you know, you can feel comfortable knowing that the capital appreciation you're going to get from the underlying stock is most likely going to outweigh that dividend you would have gotten in the stock. You know, one of the best ways to look at it is, you know, these are great stocks that will continue to go up over time. If you get a dividend, that's just an extra bonus. That's an added, you know, that's like going to the ice cream shop and getting sprinkles on your ice cream without even asking for it and not even having to pay for it. You know, it's just that added extra bonus. It's nice, but it's not necessary. You know, the capital appreciation aspect is still going to be the number one thing. You know, because most of the time, if the stock pays a dividend if they're not showing up here and they pay a dividend, you're probably going to lose more on the underlying capital appreciation side of things than that dividend's going to be supplementing. You know, especially if you look at, you know, some of the sell-offs that we've had, take a look at, you know, build a watch list of stocks that you'd be interested in that have that dividend, or that you've been in that have that dividend, and see how they held up through, you know, the sell-offs we had last fall, through, you know, this most recent sell-off, and see if that dividend would have made up for the loss in the share price there. And let me know what you find out about that. You know, that's so adding that dividend aspect of things may not be the greatest. If that's your cup of tea, though, I'm not going to tell you not to. You know, if you like dividend stocks, that's fine. But you know, when you see some of the appreciation or the capital appreciation you get from these, I would rather get the capital appreciation myself than worried about, you know, trying to capture a dividend as well. If it pays the dividend, great. I'll take the added bonus. But if it doesn't, that's fine with me. I know my cash is still growing. So that's going to be really the main thing we wanted to talk about here today. If you have questions, you know, let me know. I see the chat there is. Hopefully you guys are taking notes on this. If you're not, just give our support a call. We got a great support staff here at VectorVest that can help you out. If you want to ever customize any searches, give them a call. They can help you out with that as well. So with that, you know, that's going to be the main thing we're going to be talking about here today. If you have questions, let me know. Countless research shows that buying solid dividend stocks and buying and holding will outperform trading stocks. And so I've seen that research, and yeah, that's fine. But these aren't really trading stocks. These are going to be your longer term stocks that you buy and hold, you know, 6 months a year, maybe even longer. Trading stocks, when you look at what they consider trading stocks, that's like swing trading stocks. You're in for maybe a week or two, a couple of months, that kind of thing. These are going to be longer than a swing trade. These are going to be some buy and hold style stocks. Now, regardless of that, you know, regardless of whether it's a swing trade, a position trade, a buy and hold, pays a dividend, doesn't pay a dividend, if the market starts selling off like we saw 2007, 2008, obviously we would recommend not holding on to it. And VectorVest has, you know, protected our subscribers from 2007, 2008. We've done it time and time again before any major correction in the market. We've given early warning signs. Dr. DeLito's talked about them in his essays. We give you that information every single week, right there on our homepage and the Strategy of the Week videos. So, you know, you can feel comfortable and confident that you can buy these kind of stocks, hold on to them, and if there's a major sell-off or, you know, major trouble brewing in the market, we'll give you plenty of warning signs here at VectorVest to make sure you have plenty of time to close out of your positions, lock those gains in, and not be, you know, hit like a lot of people were in those sell-offs there. And, you know, as the old saying goes where money grows. And if these companies are growing their money, that's where the big money is going to be going. So that's why we see this happen. That's why we, you know, feel confident in these kind of stocks and confident in the relative safety indicator. If you're not subscribed to VectorVest and you found this kind of information powerful, let's say you're, you know, somebody who's younger like myself, and you want to, you know, start getting into building a retirement account for yourself, building a retirement portfolio. It doesn't take a lot of money. It really doesn't. You know, starting off with a couple of thousand just to get your feet wet and letting that start to grow is really, you know, one of the best things you can do. Starting early with whatever you want to put towards it is one of the best things you could possibly do. And if you're interested, if you found this to be useful, if you want to see more into this, you know, you can always, we have a special offer for our Twitch followers. If you type Twitch or exclamation offer, you can find a 99-cent trial. I believe that's for 30 days. A real-time trial. So everything you saw here, you can get for just 99 cents for 30 days here. So if you're interested, want to take a look, want to see how this can benefit yourself, make sure to take advantage of that offer. We don't offer it anywhere else, so, you know, don't miss out on that. Badger, Glenn sings for us every day. As you enjoy, close out the show. Whatever is your musical spirit. Unfortunately, Badger, I don't have a deck of cards with me. I don't know if Glenn has some here, so I can't do that. Also, Glenn is a professional singer, so unfortunately, not going to be able to do that for you. I don't want to hurt your ears. I don't want to scare people away, so I'm going to hold off on that for Glenn. But yeah, I see Joey making mention of it, or somebody's making mention of it. You know, 99 cents for a trial, be a great Father's Day opportunity as well. Father's Day, I didn't even realize it's just right around the corner. If you forgot like I forgot, you know, you can take advantage of the offer, get it for them for, you know, a Father's Day gift. Let them take advantage of it. Let them play around with it. Because, you know, once you get into the software, you see this kind of power that we offer here at VectorVest, you know, it speaks for itself. So with that, though, you know, thank you all for tuning in. It's been fun being here for my first time, my first full session here. Tomorrow's going to be even better. It's going to be something I'm a little bit more familiar with the, you know, what is it called? The Fridays Fire.
Yeah.
What's Glenn call that?
Quick fire.
Yeah, Quick Fire Fridays. Quick Fire Friday is going to be a lot of fun. Looking forward to that. Looking forward to seeing you guys there. Looking forward to analyzing your stocks. You've seen it in on my Facebook streams that I do for our mobile. I do that every Thursday at the end of our sessions. So now that I have the full power of VectorVest is at my fingertips, it's going to be a lot of fun. I can get a little bit more technical with it, more so than what I was able to do there, or able to do with just the mobile. So looking forward to that one, guys. Definitely looking forward to it. Thank you, Badger. Thank you. Also, you know, if you liked what you saw here, you want to keep supporting this, you want to, you know, continue to help us grow, Glenn's done an excellent job growing our subscribers here. We've got one new follower today. Steve, thank you once again. If you want to support us though for free, if you have Amazon Prime, make sure to link that to your Twitch account. You can subscribe using Twitch Prime for free to us for a month. If you want more info, make sure to click on that link there. You know, all the support we can get helps. You can use exclamation Prime to get that link as well. You know, we really appreciate it. Continue to support us, continue to grow our channel. You know, if you go and you look up other investment channels on Twitch, you're not really going to find anything. Before we created our Twitch stream, you know, I did a little research on that myself. All it really is, you know, no talking, somebody's screen showing their trading account, and that's about it. You know, here we not only, you know, get to talk and interact with you guys get to interact with each other, but we also teach you, you know, important values and lessons on the market and how to, you know, really utilize that to benefit yourself, you know, benefit your friends or benefit your family as well. That's one of the biggest, most important aspects to me in my life is my family. So knowing this kind of stuff and being able to prepare and being able to save and grow for retirement, grow for my son's, you know, college funds, that kind of stuff. It's definitely a powerful piece to help me get to my end game goals with that.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.